Hello everyone, good morning to all. Welcome to the new session of our e-learning class. I am Rasmi Ranjan Mishra, lecturer of UN Autonomous College of Science and Technology. Today I am going to discuss on a subject regarding entrepreneurship and small business management. So on today's discussion I am going to discuss with you relating to financial management of small scale industrial units. So how small scale industrial units they manage their funds at the time of starting their ventures or starting the new project as well as existing project, that we will discuss one by one. So listen carefully and watch my video. Financial management is one of our main avenues to success as a business owner. Financial management is the way you know if you are making profit. Financial management helps you decide what you can afford in terms of a store or a office location, inventory purchase, employees and equipment. You need sound financial information to set your price and select your vendors. It gives you the tools to plan for overall business growth, for diversification of your product line or for reaching new markets. Financial management helps you decide which product, service and markets are profitable or not. So we already know finance is one of the most important part for every business. It is the lifeblood of the organization. Without finance, business cannot run, or without profit, the business is meaningless. So if the business having no fund, then it says that there is no better management. So financial management is the main avenue and it is the way to know if you are making the profit. That means when we make more and more profit, we manage it better way, so that we take decision in terms of every aspects. It takes into consideration the stores or office location or employees or inventory purchase, whatever may be. Organization need sound financial information to set the price and select the vendors. It gives the tools and a plan for overall business growth, for diversification of a product line or for reaching into new market. Effective financial management gives tools to chart your course into the future and adjust the direction when needed and help you find your way through challenging times. If business requires loan, financial management provide information which source is the better to take the loan and how that can be managed, so that business can earn more and more profit to repay the loan out of the profit amount. Financial management gives not only the documentation needed for the loan application, but also help to discuss the business circumstances with the lender in terms that improve the ability to qualify for the loan. Finance, as it is lifeblood of the organization, it needs to meet the requirement of every business. Each and every business concern, they must maintain adequate amount of finance for their smooth running of the business concern, as well as maintain the business carefully to achieve the goal. The business goal can be achieved only with the help of effective management of finance. So we cannot neglect the importance of finance at any time or at any situation. We must take into consideration important aspects. So there are different importance of financial management. The first one is financial planning. If we have not planned the fund, in that case that business cannot move successfully or cannot reach the goal or objectives. So financial management helps to determine the requirement of the business concern, and it also leads to take planning for the concern. Financial planning is one of the important part of the business. A financial plan is the forecast of a future performance of the business, usually prepared using different software. Small business, they can benefit greatly from taking time to do the financial plan at least annually. The plan must help the business owner to better manage the cash flow by preparing the situation which result in cash shortage, such as seasonal fluctuation in revenue. The financial plan is normally prepared as part of overall business planning process, and during which the goals are set or strategies are made to help the business in upcoming year. Then different source of finance. The first one is long-term source of finance. That means it can be defined as any financial instrument with maturity period of 1 year or more than that, such as bank loan, bond, lending or other debt finance, and a public and private equity instrument. The long-term finance source include both debt as well as equity. Equity finance that comes either from selling new ownership interest or from retaining earnings. Financial manager, they must try to select the mix of long-term debt as well as equity which results the best balance between cost and risk factors. Another one is cash management. It is a very crucial daily task of every business. Its purpose is to ensure liquidity, keep track of cash flow as well as manage different short-term investment. Liquidity means you are able to fulfill the short-term goals and obligations in accounting term. Your liability, which includes account payable. There are various ways to keep the track of liquidity. The most convenient method is ratio analysis. Your current ratio that measures your asset against your liability. Asset that includes cash, inventory, accounts receivable, while liability, accounts payable, loan, wages, etc. A monthly cash budget that helps to know how cash flow in and out to the business. In addition, it will also show the difference in timing between realizing profit and turning them into cash. Prediction of cash that needs and prepare cash budget projection for up to a year. And this will be immense help with cash management. If we need change, modify your project as soon as possible. Then another one is working capital management. It is the relationship between company's short-term asset as well as short-term liabilities. In simple, we can say that a company when handles its income generation and expense, that is day-to-day requirement, for that is called as a working capital management. Generally, assets and liability is one of the most important things for business owners. Small business particularly should drive a perfect balance between assets and liability effectively for carry out the day-to-day operations. Appropriate working capital must be required to avoid any type of a bankruptcy. The relationship between bankruptcy and working capital that needs a better clarification. Next, we are going to discuss what are the various ways to manage the working capital and cash flow. Maintaining working capital for everybody's responsibility. Then pay to the suppliers in time. Whatever amount that is going to pay to the supplier, that must have to pay on time. Then control the business expenses carefully as much as possible. And daily watch of the closing stock or the stock which is used in the production. Then we have to talk or organization have to talk to the alternate lenders, and a emergency loan that can also be a short-term solution, and a asset-based financing that can be made, which can be an asset. Then next we are going to discuss the recommendation of a various committee. The following committees, they are specially appointed for administering the working capital. The first one is the Deja Committee Report 1969, then Tandon Committee Report 1975, Core Committee Report 1980, Martha Committee Report 1984. We will discuss one by one. The first one is the Deja Committee Report, which was made in 1969. The main objective is to carry out the credit need of the industry and how that needs inflated, and such trends were checked by under chairmanship of Deja Committee. What are the findings? The first one is general tendency was found out among the firms to avail the bank credit more than the requirement. Second one is another tendency was also made that short-term credit was generally made by for the acquisition of any long-term assets. Then the third one is the lending through cash credit can also be done on the basis of a security in order to assess the financial position. What is the recommendation? The first one is appraisal should be done by the bankers on the present as well as future performance. Second, the total dealings are segmented into two categories. One is core as well as second one is short-term needs. The third one is the committee suggested the firms to maintain only one account with one banker for huge amount of borrowings consortium as suggested by the bankers to lend to the corporate borrowers. The second one is Tandon Committee. This is made in 1975, which has an intention of granting loan and advance to the industry on the basis of study of the development process in order to improve the weaker section of the people. The main findings was the bank should not reveal this much only to lend to the requirement of the firm in accordance with the lending policy. The second one is it should be treated as a supplementary source of finance but not as a major source. Third, loans were lent only in accordance on the basis of the securities produced by the borrower but not on the basis of a level of operation. Then the next one is security compliance won't provide any safety to the banks, but periodical follow-up should be facilitated to the banker to get the amount back and advance if lent. Then the recommendation, it is the landmark in studying the need of industry towards the requirement of working capital. The main recommendation was necessary information about the future of operation that must be supplied. Then the supporting current assets should be shown on the banker at the moment of borrowing. Then the third one is the bank should understand the credit is only for the purpose to meet the needs of the borrower but not for the other. The third committee, that is core committee 1979. This committee specially constituted only for the purpose of a study of a sanctionable limit of the banker and the extent of a loan utilization of the borrower. The another purpose of the committee is to appoint to provide the alternative way and means to afford the credit to the industry to enhance the productive activities. Continuance of the existing three system of credit by the banker, that is cash credit, loan as well as bills. No need to bifurcate the cash credit account of the borrower for implementation of a differential rate of interest. Then according to the specification of the borrower, the banker should come one conclusion, which is a normal peak level and a non-peak level of operation. Then a non-frequent sanction, no frequent sanction of ad hoc committee of borrowing from the banker. The over dependence on the bank credit should be lessened among the practices of the industrialist through emphasizing the need of the term finance. Then Martha Committee Report 1984, this was instituted by RBI and submitted the report on 1983. The recommendation implemented by Government of India from April 1, 1984. The main recommendation was reasonability of the projection statement that should be studied by the banks more carefully. Current assets and liabilities that are to be classified in accordance with the norms. Then maintenance of the current asset ratio 1.33:1. Time supply for information stipulated by the bankers. Then the borrower that has been submitted quarterly information for operating statements for first 6 months within the prescribed time. So these are some of the different committee for a recommendation as well as for a objection. So this committee was basically set up only for a providing finance basically to the small scale industrial units as well as the weaker section of the society. Those entrepreneurs, they start up their ventures for fulfilling the objectives and providing social service satisfaction towards the society. Next part we are going to discuss relating to the tax benefit available to small scale industries. Some of the tax benefits available to small scale industries in India are, the first one is tax holiday. It indicates that the small scale industries, they need not pay any type of income tax on a certain percentage on their profit for 5 years from the date of commencement of production. That indicates that any type of a small scale industries, if they are going to start up their production activities, so from the date of commencement of their production, they need not pay any type of income tax on certain percentage of profit, and that is up to 5 years. The second benefit, that is relating to depreciation. The small scale industries are entitled to a deduction of maximum of rupees 20 lakhs for depreciation on fixed asset, that is plant and machinery. The third benefit relating to tax for small scale industrial units is rehabilitation allowance. It indicates that a certain rehabilitation allowance granted to SSI unit in case their business is discontinued due to any type of a natural calamity, civil disturbance, accidental fire or any other things which is unavoidable situation. If any type of unavoidable circumstances arises, and in that case SSI units having suffered a huge amount of loss, in that case certain amount of rehabilitation allowances is granted to them. Then the fourth one is investment allowances. They are given an investment allowances at the rate of 25% on the cost of acquisition or installation of a new plant or a machinery. That means at the time of setting of plant or machinery, for acquisition of that plant and machinery or installation of that plant and machinery, 25% of the cost of acquisition or cost of installation is granted as investment allowances to various SSI units. The next part, that is expenditure on scientific research. Small scale industrial units are entitled to a deduction in respect of expenditure on scientific research. So, SSI units are allowed to a certain amount of a deduction for expenditure incurred in scientific research. The sixth benefit, that is amortization of preliminary expenses. So, SSI units are allowed to write off their preliminary expenses as well as developmental expenses. The seventh, in case of a backward or a rural area, a small scale unit set off in a backward or a rural area is given a deduction of 20% on its profit. That indicates that if any type of SSI unit, they are going to set off their unit in basically rural area or backward or remote areas, then in that case they are allowed 20% deduction on their profits. Then the eighth point, that is expenditure incurred by small scale industries in obtaining a patent or copyright, that is deductible from their income. The ninth tax benefit is if a small scale industry earns profit from the publication of books, then in that case 20% of profits earned can be deducted from their gross total income. The number 10, that deduction can also be availed for royalties from any company in India and royalties from certain foreign companies also, or inter-corporate dividend, income of cooperative society, and carry forward or set off any type of business loss. So, these are the various tax benefit available to SSI units. The next part, we are going to discuss the incentives available to small scale industrial units. So, what is incentive? Incentive means a motivational factor which induce the person to work hard or to do his work more efficiently. Simply it indicates to work hard to earn more, or to work more to earn more is one type of a incentive. That means when any type of a motivational factor is granted to the entrepreneur or to the person concerned to start up their business, in that case what motivational factor is given to them for working hard or to do more work efficiently and effectively, in that case that is called as a incentives. So, many incentives are provided both by the central government as well as the state government to promote the growth of SSI units from time to time, as well as also protect them for the onslaught of the large scale sector. So, among them various incentives given to SSI units are as follows. The first one is reservation. That means this indicates certain category of industries or projects are given to certain category of entrepreneur or to the small scale sector, that is basically reserved for that particular category of entrepreneur. So, to protect the SSI industries from the competition posed by the large scale industries, government has a reserved certain production of items and basically exclusively for the SSI units, and the number of items exclusively reserved for SSI unit considerably increased during the 5-year periods, and now that stands to 822. That means now 822 category of industrials are basically reserved for the SSI sector only to compete or the competition posed by the large scale industrial units. So, however, prior to 97-98 budget, the number of items reserved for small scale sector stood at 836, and the finance minister de-reserved 24 items during the budget in the year 97-98. So, second incentive, that is preference in government purchase. Government as well as government organization shows preference in procuring the requirement of small scale sectors. For instance, the Director General of Supplies and Disposal purchased 400 items exclusively for SSI sectors, and the National Small Scale Industries Corporation also assists the SSI unit in obtaining a greater share of government for production as well as for defense purchases. The third preference is price preference, which is one incentive to SSI unit. The SSI units are given price preference up to a maximum of 15% in respect of a certain items which is purchased both from small scale as well as large scale units. The fourth one is supply of raw material. In order to ensure regular supply of raw material, imported components as well as equipment, government gives priority allocation to SSI sector as compared to large scale sector, and also government has liberalized the import policy and streamlined the distribution of scarce raw material. So if any type of SSI units they are interested to start up their ventures or project, in that case government gives priority for allocation of a different resource for a supply of raw material as well as liberalize the import policy, and also in case any raw material or a resource their availability is scarce, in that case government also streamline for a distribution of that scarce raw material. The fifth one is excise duty. In respect of SSI unit, excise duty concessions are also granted both registered as well as unregistered units on a graded scale depending upon the production value. So full exemption is granted to production value up to 30 lakhs in a year, and 75% of a normal duty is also levied for production exceeding rupees 30 lakhs but not exceeding rupees 75 lakhs. And if the production exceeds 75 lakhs, in that case the SSI unit they are liable to pay a normal duty or a normal rate of a duty. Then the sixth incentive, that is RBI credit guarantee scheme. In the year 1960, Reserve Bank of India introduced a credit guarantee scheme for SSI industries. As per that scheme, RBI takes upon itself the role of a guarantee organization for the advance which are left unpaid, that includes interest overdue and any recoverable charges. And this scheme covers not only working capital but also advance provided for the creation of a fixed capital. So these are the some of the tax benefits as well as incentives available to SSI units at the starting of their ventures. So hope you students have cleared all about my today's class. If you are having any doubt, then you can give your comment in the YouTube comment section. Thank you. Have a good day to all of you.